Good morning, everybody. Welcome to the Yankee Model Investment Club. We are let's see. Yeah, we got 10 attendees now. All of a sudden.
It's growing fast.
Welcome. We are the Yankee Model Investment Club. It's a fully functional investment club with real money. Formed in 2008. We now have 7 members. Is that right? Do we have 8? 7 members, I think, in California, Connecticut, Florida, Maine, Massachusetts, and Texas. We went online in 2011, and we have monthly meetings on the second Saturday at 11 Eastern. We're still looking for new members. No investment experience is required, and new members are mentored by an existing member if necessary. There's no limit on where you live, except that your if your state tax laws require the club to file a return, we won't accept you. There's a place on Vimeo.com that will tell you who's got state tax requirements like that. It does change from time to time. All partners must be members of Better Investing and are expected to actively participate in the club's activities. Also to make stock presentations, occasionally using the SSG in rotation with other members. We attempt to, anyway, follow better investing principles, show respect for our fellow club members. We're all still learning. And we perform an annual audit of finances, file tax returns promptly, and deliver K-1s in a timely fashion. And we follow our partnership agreements and bylaws. Come on. The structure of the meeting we follow a standard agenda available in the handout section. You look on your the bar on your right. It lists handouts, and you can get, I think we have 7 or 8. We have 8 handouts this morning. So you can download any of them. All visitors will be muted, but can ask questions with the chat here, or the question box here. And Joe will attempt to answer them as best he can, or bump it up to the live meeting so we can answer the question. There'll also be a time to ask questions at the end of the meeting. None of the information we present here is meant as a recommendation. This is for demonstration and educational purposes only. Securities referenced in the meeting are for illustrative purposes, not to be considered endorsed or recommended by Better Investing or for National NAIC or us for that matter. The views, opinions expressed and decisions made by the club partners regarding the purchase and sale of stocks and other assets, those are the partners, not Better Investing. Securities discussed may be held by the members, and they may or may not disclose that. The Better Investing presenters are volunteers and held to a strict code of conduct that precludes them benefiting from these educational presentations. Okay, the same thing is true of websites and products we use. We are not necessarily endorsing them, and Better Investing doesn't endorse them. Okay, and we are recording this session. You'll find us on YouTube And with that, the next thing to do is to look at the agenda for today. We have an educational segment by Jessica next. Jessica, I'm going to give you the platform here. Give you the
Okay.
floor. Where are you? There you are.
All right, can you guys see my screen?
Yes.
Wonderful. I picked understanding the RSI, or relative strength index. It's just something I didn't know much about. I've seen it before, but yeah, that's why I picked this topic. So what is the relative strength index? It is a momentum oscillator developed by John Wellers Wilder. It measures the speed of change of price movements of a particular stock, and it has a range value of 0 to 100. It is not a quality indicator. It's just to track price movements and the magnitude signal of a particular spot, indicating if it might be overbought or oversold. Yeah, a gauge of how to think of it as either the stock's getting hot or cold. It can tell you if it's been rising or falling too fast, and it can help with deciding to buy or sell a particular stock. So how to use the RSI in investing. The range is usually set at anything over 70 could be considered overpriced or due for a pullback. Anything under 30 may be undervalued or due for a bounce. You can use it to time entry or exit into a stock. It should be combined with other tools and not used as a standalone indicator. This is the calculation. It's 100 minus or divided by 1 plus the relative strength, which is the average gain divided by average loss over a particular period. Generally, it defaults to 14, and it's usually days. Most charting platforms will automatically calculate it for you. It's to reflect recent gains and recent losses. Oops. It tracks prices over a rolling period, often defaults to 14, and then that period could be days, weeks, months, and you can change the default on the calculator to which one you would want. You need to check what the defaults are when you're looking at the stocks. So this is up here, reference of the RSI. This is for SLP, a company that the club owns. And you can see up here in this green, this top line is the 70 mark, and anything over that is possible overbought. And then the 30 line down here is for possible oversold. I was going to show where to find that on Better Investing. I've looked at this on like Yahoo charts, but I didn't realize you could find it within the SSG. So if you're in the SSG, this is SLP here, and you go to the research tab and price charts and the start charts weekly chart, it will pull up that graph, and you can see the RSI up here in addition to the price and the MACD. And then down here is where you can kind of change parameters. So you can change this to, if you wanted it to be like 10, it'll reset this to 10, and the period is weekly. You can change it to daily, and it'll create a much more bumpy graph. Generally, the longer the period, the more likely you are to capture an actual overbought, oversold. This 70 and 30 is what these charts default to. If you go to Yahoo, the upper limit is 80 and the bottom limit is 20. Just so you know, it could be give you a more accurate prediction of an overbought, oversold if you changed that limit. Where do you find the RSI? You can find it there in the chart section of, if you're looking at an SSG. You can also find it on any of the chart stocks. It's a fairly common indicator used under the technical indicators. Tips for using the RSI. It works best in sideways markets, meaning a fairly stable market where you have a stock whose price is trading between a particular range, like $60 to $70, as opposed to markets where there's strong trends of like going up or going down. RSI can stay in the overbought, oversold longer than expected when there's a strong trend. The RSI should not be used alone. You should combine it with other indicators and always look at the big picture. It is like a speedometer, but you still want to check the road. This is just a recap. Above 70, 80, possible sell signal. Below 30, possible buy signal used with other indicators. And the references for this, there was a ticker talk in November of 2017 on the RSI given by Marion Mitchell that you can find in the library. And then this was just a link to chart stocks, chart school information on all of their different charts. And this one's for the RSI, and it gives kind of a just paragraph version of what the RSI is. And that is what I have.
Sorry, I missed that you changed a number that was in the parentheses to 10. I think, what does the 10 represent?
That would be 10 days. Like, let me go back here. You can
correct.
change this. It defaults to 14. And your
Okay,
periods
so
are weekly.
Trailing 10. I see. Okay.
I think it defaults to 14.
Yep.
Anything else?
Good stuff, Jessica. I think this one, especially when we are considering to add something, this is a good indicator for our portfolio.
Yeah.
Thank you.
Jessica, do you know what's
I
impacted the SLP the last week or so?
Yeah, I'll talk about it. Yeah, I'll talk about it when we get to it. They had they announced a decline in their yearly expectation.
Hmm.
Or their yearly revenue expectation. Nope. All right, I think, is there anything else? Because I think I'm supposed to do the minutes next.
Yeah.
So I'll just keep the screen and go over that quick.
Okay, good.
All right. This is the minutes from last month. Jack called the meeting order at 11. He presented how to compare portfolio growth to the SPY. I presented the meetings from last month. Sriram presented the treasurer's report. This was a capture of our valuation in Viveo, our company size diversification. Sriram presented Oddity Holdings, which we decided to add to the watch list. And we decided to use money available to buy NMIH. We had a discussion about selling Pfizer, but decided to wait for more clarity from the market. And I didn't have any new business other than we assigned Netflix to John to watch. And there weren't any questions that we had. Does anybody have any questions on this?
No.
All right. I will give it back I can get to it.
I think Shriram is next, right?
Let
Treasurer's
me
report.
see. There. All right. I don't think I can give it to him, but
Yeah, good.
I'm taking over. Give me 1 second. Show my screen.
Yeah, I see your screen.
Yep. Let me expand the screen and let's look at the BVO reports for our current valuation. Again, we have for this month $1,990.35 to spend. The performance so far has been as it was. I know SLP, we saw the surprise, but everything else actually in the positive except for Pfizer, and more or less in good shape. Individual member status, everybody paid for this month. I know John had some issues,
I
but
made a mistake, John. I'm sorry.
yeah, I don't think John is on. Is John is on? I didn't see him.
I think he said he wasn't going to be.
Right.
He's in the list
No.
as attendees.
No, yeah, John is on.
Oh, hi,
He
John.
said he's going to be in the listen only mode. So yeah,
Oh,
very good. And then member performance. Again, John and Randall are, they don't have the history to have a annualized return. I'm still in single digits. Jessica's back at 12%. Good job, Jessica. And this is where we are. We do have a few transactions. We did purchase some shares in the past, in the last month, NMI Holdings and NMI Holdings.
Yeah.
And then we did get some dividends. Overall, nothing surprising or anything like that. I think that's it. Looking at the balance sheet again, probably we may not have too much of information in here, but as you can see, we do have pretty decent. None of our holdings are too much or too little, so they are there. I think we have been able to manage them well. We need to probably,
yeah, no capital gains because I don't think we've sold anything.
yeah, we haven't sold or anything so far, so we will worry about it later on. I think those are the main things we look at this.
Yeah.
For our report. Yeah. Any questions or any comments on the treasurer's report? If not, back to you, Jack.
Okay. All right. Let's see. Steve is the step to study. So let's get to Steve here. Okay, you should have.
You see my screen?
Oh, yep.
Okay. So good morning, everybody. And the stock to study today is UFP technologies. And full disclosure, I have no idea what the acronym UFP means. But there it is. So you're going to hear a lot of complaining about AI today, and I'll go through this and show you how bad it is. This is with the free AI, and I'll show you what I mean here. So the ticker symbol, it's traded on NASDAQ. So first AI problem, market capitalization was wrong. So after the word Copilot is what Copilot gave. But before is what I went and grabbed from Yahoo Finance. So Yahoo Finance actually says it's almost a $2 billion company. Copilot was saying is 1.5. Going down, they actually got the industry correct. It's a medical specialty and industrial packaging, and especially sterilized packaging. And it has an engineered components. So I'm just going to, for a split second, I'm going to switch to the website here, and I'll show you what they push themselves as. So primarily, they're pushing themselves as a medical technology kind of company, and then, oh, by the way, because we do this, we can also do all these other kinds of material type stuff. Okay. Okay, so another thing that was wrong. Copilot went and identified that it has 13 manufacturing sites, and it identified Connecticut as one of the manufacturing sites. Well, there's no manufacturing facility in Connecticut, so wrong. The beta. So Copilot had yielded a 0.72 beta, which was wrong. It's actually 1.12. Debt. So the company has $198.54 million in debt, and it has $14 million in cash. So it's definitely not a fortress stock balance sheet, because it has more debt than it has cash, but it's normal, right? Okay. Another place where Copilot had some issues. So ownership. And I'm not sure that if Yahoo didn't have its own hiccups here, but Yahoo was saying 3.72%, but Yahoo also said that institutional ownership was 112%, which, it doesn't make sense to me, but who knows? So it's all over the map with the institutional ownership. Okay. Is it a growth company? It certainly is a growth company. It's for a small company. It's really good in this area, and I'm just going to divert right now, and I'll show you part of the reason why. Let's go here, and we'll pop in the ticker symbol here, UFPT, and here we are. I think this is very important for everybody to see here. So we go down to the stock grader, and we go to the full analysis. Uh-oh, no, here we go. Yep, here we go. Oh, okay, wonderful. And we see the breakdown of this company. Industrial specialties, it's 1 out of 16. Industrials, it thinks it's 11 out of 820. And in the whole U.S. stock market, it thinks it's the 66th best stock. And it says best stocks for growth. It's in that bucket, 22 of 170. So I was very impressed that UFP had this kind of a ranking. I was actually floored by it. And then here it comes. Here's the gold. growth. Look at very rarely do you see growth at A, and everything is rated an A. Where it suffers here is value, right? Because it's fully valued. So that's where it's suffering here. It gets some Fs because because you're fully valued. Profitability, our favorite friend here, A minus, everything is looking really good, and cash flow, you're getting a B plus. So I thought, at least from a fundamental breakdown percentage of a third-party tool, it certainly looked very, very good.
Can you just go back to the fully valued? This is Randall. I'm kind of the newer person, so I just want to make sure that I'm clear in my head. When you say it's fully valued, what does that mean?
So there are growth stocks and there are value stocks. So a value stock is a stock that it's going to do well, but it's oversold. A growth stock is it's going to do well, but everybody's buying it. At least that's my opinion, right? So when I say it's a growth stock and it's overvalued, everybody's buying it. And what tells you that? Well, the PE is high, right? Flunks PE.
Right.
Price to book ratio is high, flunks that. Price to sales ratio only gets a C. So if its price to earnings was low, it would be undervalued. The stock is not undervalued. Does that explain it? Does that help tell you where I'm coming from? Okay.
Yes, thank you.
Okay.
I just want, anytime I can get a chance to learn, I'm going to take advantage of it.
It's all good. Okay, so where were we? We were right here. So is it a growth company? So yeah, I think so. I mean, certainly from this breakdown. So let's go here, and this seems to be a little thing that I learned because I never used the better, but I have to now because Toolkit isn't supported anymore. So I have to use it, and go and meander down to here. So where did I get these numbers? So let's get the sheet up. Here we go. Future sales. Well, historical is 15.1. Yeah, so I'll give them a 15. Earnings per share, historical 25. I'll knock it down to a 20. So that's where I'm coming from on mine. Okay. PE history. So let's look at the present price. The present price is 237 and 27 cents. So that's when I was doing it, and I think it changed slightly. I'm not sure if that's the actual. That's what it closed at Friday, but that's what when I was doing it Friday. That's what it was. Okay. Let's get into the other numbers. Yeah, so I picked 30 as the high PE, and then my projected earnings per share, I picked 17.3, and I think that's just what it was spitting out. And lo and behold, we finally had some PEG ratio that made sense. It was actually 1.2. So I was pleased with the PEG. Does this thing spit out a dividend? No, it does not. And here's the curious thing that I thought was so neat that I had just noticed this, and I'm sure you've all been using it for a long time, but this sentiment thing here and how far off I was because I actually saw mine in here, and oh, there's actually somebody that made it higher than me. But you can see members doing the same stock, and I think that's me, 609. Is that right? Is that, yeah, 609. Yeah, there's mine, and I was the highest. I was shocked that I was the highest for all the ones that look. I mean, there's nothing higher than me. So you're gonna have to take this stuff with a grain of salt, and I'm sure that you guys will chop this down a little bit. But I'm just to show you where my numbers are coming from. Low price, I picked 141. Let's go take a peek at that. See why that, yeah, what did I do here? I just picked the, this thing here, right? Because I wanted to torture this to get it into the buy zone. All right. Okay, so I've got to buy up to 258.4. I'm shooting. I'm thinking this thing can more than double in 5 years. The par, I had to really search for this because it wasn't in the usual spot that I was used to looking for, but I actually found this, and I wanted to double check that I'm getting the right values here for this. Let me split the screen here a little bit. Just wanted to make sure that I was pulling these numbers from the right place for par and total. Here we go. Okay, let's slide this so, and it was on the right hand side, and it was on, was it, no. Is it this? I forget now exactly where I found that. But I wanted to have, I wanted it double checked. Let me know. No, that doesn't seem right. So, no. Here we go. Okay, yeah. So this is where I pulled the projected return of 15.2 and the, whoops, the total. So I have them opposite here. The total return should be 20.8, and then the projected average return is 15.2. So I have these should be swapped, but this is where I pulled it from. Altman Z was a weighty 66.15. How did I find the stock? I couldn't find, our mandate is to be 25% small, 50% mid, and 25% large cap, and we just don't have enough small stocks in the portfolio. So therefore the mandate is we must evaluate small cap stocks. So mercifully Jack found it, and it was on the Better Investing website of all places. So everywhere I wasn't looking. So what are the pros of this company? So this company is actually diversified. It's primarily a med tech company with sterile packaging, but it also makes like insulation and soundproofing and all kinds of things. Market Grader gave it a glowing review. It's actually in my buy zone. The company is actually a small cap, and the company doesn't have a full value line. It has a partial value line, but the company is actually below the value line. So at least value line thinks that it's undervalued. So Knox, this is not a value-orientated company. It's growth, meaning that it's fully valued. We're not getting, I don't think we're getting a steal here, but I'll show you a graph in a second. And it's not covered by that in a full report. We're not getting a full value line report. I did want to just kind of quickly show, and I did Jessica's RSI while she was giving the demo. and I just used the standard 14, and mine happens to pop out at 17 and 30, and so it does seem to be a little bit, we're kind of towards the top. But the thing I wanted to show here was this. Let's go to say 10 years here, and I wanted to tease Jack a little bit here, and we'll go to quarterly here. Yeah. So this has always been good. I felt that when we have rising quarters and the stock price is going down, the stock price is eventually going to turn, right? So it's going to go up. If earnings are going up, the stock. So I kind of feel that we're getting it at a little bit of a discount here compared to how it hit these highs. So I liked that. And then to tease Jack just a smidge, he said he hadn't found a negative quarter, but I sure did here. So I think it was in 2005. So it was a long time ago. And there it is. It's a minus 3 cents a share. They actually lost money in 05. And there are previous quarters where they actually lost money. But I think that's the most recent. So about 20, it's been a while since they've lost money. They've actually had a negative losing quarter, and so it's been a very long time. So then that's kind of the pitch. We'll start with Brent. Brent, do you have any questions for this?
I don't think any questions. Let me jump to what I did. It looked very promising to me. I was almost reversed as far as what your sales and EPS growth rates were.
Okay.
I trimmed my SSG back to like the last 5 years, and doing that, the historical growth rate was around 31% of sales. So I pegged that to be maximum of 20%, and then did preferred procedure on that and got like 17.6% earnings per share growth. So just a little bit lower than what you were predicting.
Okay.
And then I agree that it's a little bit pricey. So I took out one of the outliers for the high and low PE ratios when I did the average, and used an average high PE of 30 to calculate the high price over the next 5 years. So that came to about $550 for me.
Okay.
But through all of that, I got it in the buy zone, like right over the kind of the dividing line into the buy zone. Yeah, I agree. It seems like it's a strong small company, which we've struggled to find in the past.
Right.
I didn't find much, analysis. The value line was just the kind of overall, general statements about what the company is. Didn't really have analysis. Morningstar did have analysis on it. It's a 3-star, like I think you mentioned, with a narrow moat. But their wording on it was kind of mixed, because they kind of like tempered their analysis, saying that even though we show some positive traits about the company, can proceed with caution, just because I think they're saying that a lot of the value, like you had mentioned, is already rolled into this current stock price. But I also looked at Manifest Investing. Let me pull that back up real quick, and I think it was quality of 93, which is nice, and then the par for Manifest Investing was 14%. So
that's pretty good for a small cap, isn't it? I mean, that's pretty. Yeah.
So a lot of promising indicators, I thought. But nothing else is jumping out at me. So looks very promising.
Yeah. So to be honest about, let's face it, it's a very large small cap or a very small mid cap. So it's on that kind of that range.
Yeah.
Thank you, Brent. Jack?
Yeah, I got rid of some of the bumps in the growth on the front page of the SSG. So the my sales growth ended up being 18%, and then the historical, then EPS with the ended up being 20%. No, that's not right. That's the same as you. My growth was like 18% and 20% or something. So I ended up with the same EPS growth rate, give or take, as you. But the buy, I ended up with a buy of 239, up to 239. I think the present price
Oh,
is
wow.
233 or something.
Yeah, what is it? It's 237.
I think it went down a little bit the end
Yeah.
of the day on Friday.
Okay.
It closed
Yeah.
at 233 yesterday, Steve.
Oh, okay.
233,
Yeah, because this is frozen when I did it yesterday. Okay,
Yeah.
so it's what, 233?
Yeah.
Okay.
So it's not a buy by much, but it's a buy. Most did I see that? Yeah, the peg was a little bit higher at 1.4.
Oh, okay.
Because my growth was a little lower than yours. And I saw lots of Galtman Z's. I couldn't figure out why they were bumping around, but Guru Focus, which I've used before, it said it was 5.5, but it's well above the 3 guideline for all the ones I saw. It's in the healthcare industry, which I couldn't figure out at first, but yeah.
Yeah, that's what they say, and that's what they're pitching themselves as a medical.
But they do have some
medical devices, yeah.
segments in other parts of in other industries. So,
yeah,
I think it's a pretty good stock. It's I was impressed by how steady they are. They do have ups and downs, and they had some problems during the COVID area of 2021 because people just weren't doing things health-wise unless it was absolutely necessary. But they recovered pretty nicely, and they're kind of recovering from the recovery. So that from 22 to 23 didn't change very much. I think because everybody got stuff done in 22, and then went back to baseline in 23. So it's a nice looking stock, and I think we should get it if we can.
Thank you, Jack. Jessica?
I like the stock. My sales were lower than my sales and EPS were lower than everybody else's, I think. I had them closer to 12%, which is conservative. It ended up in my hold zone at like, I think I had to buy up to 230 or something. But one of the things I really liked about this company is, I don't know about the packaging part of it, but the kind of healthcare infectious disease part of it. It is such a big part of hospitals, and one of the metrics they track is like infection rates that you get during your surgeries or during your hospital stay. It's just an area that hospitals aren't going to be cutting back on as far as spending goes. I know that budgets have been tight for a lot of hospitals, but this is just like one area where I know like they're going to keep buying just because it affects reimbursement. So I kind of liked that it seemed like there'd be at least a steady income. I don't know what their competitors look like, but they have a product that I think will continue to be in demand. So I liked that about them. Like I said, they were
great to know.
Yeah. They have those robotic sleeve surgeries. Like robotic surgeries are becoming more common. Like a bunch of other surgeries that had previously been open are getting approved for these Da Vinci robot surgeries. There's just better recovery time and people are in the hospital less. And one of their products is like the sleeves that go over all of these ports to keep the OR free of infection. Anyway, it's a product that I think will continue to be in demand. I don't see anybody cutting back on that.
Very good. Thank you, Jessica. Sriram?
I like this company, Stephen. I think we have a good opportunity to buy this one. Only question I have is, oh, by the way, I did find the name UFP stands for United Foam Plastics.
Huh.
Oh, good job, because I couldn't find it.
No, but overall, I think there's also a company, Universal Forest Products, which is completely different from this.
Yeah.
I did. I like it. I was a little more conservative, and my buy zone is a little less than 230, but we are still close to it. I'm not worried about that. Only question I have is, will tariffs affect these guys much?
Ooh, that's a good question. Well, I mean, they're a U.S. based manufacturer. Then the question becomes is their raw materials, right? That would be the thing that would be tariffed, because they can't tariff the final product, which is so it's probably as mitigated as you can get it for a manufacturer.
Yeah,
would be my guess. Yeah, because it would just be the raw materials that would be subject to the tariff. It wouldn't be the finished product, which is actually made in the U.S.
Yep.
So that's a good question. And to be honest, it didn't even cross my mind when reviewing this, but that's very, very important, a very important question.
Yeah. But overall, I think the diversity, I mean, it's rarely you see a smaller or mid-sized company this diverse portfolio. I
right.
like that.
Usually a small company is like a one product thing. But yes, you're absolutely right. But see, this is why, because they've been in existence since since '94. They've been on the market, so they're older. So it's a small company, but they're an older and small, almost $2 billion company. So it's a large small cap or a very small mid cap. So yeah. So that the reason it's because they're older. They've had time to acquire. And to your point, I just want to bring up something that here they're touting their acquisitions. So they're also growing by
mergers,
by buying companies.
Yep.
So they're growing. They're not standing still, these people. That's for sure.
Yeah. No, I think it's a good company, and I like it. Thanks.
Thank you. Randall?
Not to parrot everybody, but I'll just say it this way. A company of this size, have we ever seen one that actually looks better? I mean, in terms of the diversification, and I like what Jessica brought up, which is, yes, this is an older company, but they're clearly doing things that seem to be of use to hospitals in the future. A lot of times when you see older companies, they kind of get stuck, and it looks like that this company is evolving, especially with the acquisitions. Numbers wise, I mean, it looks great, and we actually should want a little bit of something different in our portfolio that might be, as you said, overvalued a little bit, but we need that diversification. So I like it. And one other thing was, when you were comparing your numbers to the other folks, there was someone who had a number higher than you. I think I saw it was like 641
Yeah.
or something like
Let's
that. There
take a
was
look
one
at that.
person who made it
That was
higher.
after I made the let's go to the sentiment here.
Oh, it was after?
Yeah, I was actually at, because I think it was
Yeah,
yesterday was the third. Yeah, so this
there
is
it is.
mine. Here's my row here.
Yeah.
I did it this
That's
morning.
me. And so yeah, so somebody did it. So somebody made it right today.
Yeah.
Yeah,
Yes, I
that's right.
saw that when you were talking. So I was just wanting to let you know. But it's not like your numbers are like way, 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 way off. I mean, there's a gamut here. But again, I think a lot of that has to do with the fact that this is a smaller company and just trying to get all the information. It's a little harder to get, but I like it. This is a very good find. And I'm probably going to be looking at this in my own personal, some other stuff.
Yeah, it's very good. And to answer your question, I've never seen in air quotes a small cap this diversified. I just haven't. Usually they're a one trick pony that they're trying to diversify. This company is already diversified, so I really like that. And I really like that a lot. I think the only person that we haven't gotten to today was John, but his internet is terrible, I guess, and he did not want to speak, but he was not a proponent of this stock. So, John, if you want to speak, now is your time. Otherwise, we'll move on to the to the report on our stocks that we follow. Okay, I don't see his microphone unmuting, so I can go first.
Okay,
I'll just go ahead, and
go ahead.
if that's okay, Jack.
Yep.
Okay. So I'll go, and then we'll have Brent go after me. So, okay. So for Alphabet, I currently have Alphabet as a buy. I have a buy up to $201. There was a huge story in Barron's just last night that the click-through is changing for search. And why is it changing? It's changing because of the artificial intelligence. And so there's two blocking things that are chomping into their search numbers. One is just other people are using other AI, such as ChatGPT and Claude, etc. The other thing that's chopping into their search numbers is themselves, and I'll explain that. So when you search Google now, you get an AI summary. And the AI summary is so good that it answers a lot of the questions. You don't have to click again. So they're doing it to themselves, but they have to, because they have to keep up with the Joneses. So there was a huge article about Alphabet, and the boil down is that search is changing. Where do they make most of their money from? Search. So it's very concerning. However, they're on the forefront of it, and the authors actually recommended buying Alphabet. So the other component that was interesting with Alphabet is the judge is weighing the penalty phase now. And if this thing gets broken up, we're going to be in the money. I mean, we want to hold this. We want to have them broken up. That would be phenomenal for us. But what was interesting, what the article said was this, that the judge is not going to use the current competitiveness from the AI searches. They're going to look to the past, which I was very shocked on. So I guess once the trial concluded, then they look backwards. So they might get broken up. I was floored when I read that. You would think that they would consider current market conditions, but no. At least that's what the article said. Moving on to Visa, I have them in the hold range. I have them a buy up to $344 a share, and it's currently $353, and it's not too far from its 52-week high. I have kind of a funny story about them today. So I read an article that said the cash to card runway still has some legs for the next decade, and that MasterCard and Visa were the two primary reasons. And we happened to go to California at the end of May, and we were with some in very good shape elderly cousins, and they exclusively used cash. So there's plenty of there's plenty of room for people to jump on cards more. So yeah, I agreed with the article. DHI, sorry, DR Horton. I have in the buy zone. I have a buy up to 138, and the stock is currently at 123. So there was some, there's some rough news, right? So housing starts are down, and this spring building materials are up, but the big builders, DR Horton, Lennar, and Pulte, have kind of shrugged off the negative headlines of policy uncertainty, materials cost, and interest rates. So my comment here is really that stuff doesn't affect them as much as the interest rates do. So, and now we have the war. Gas is going to skyrocket. Monday, it's the price at the pump is going to go way up, and they're with gas going up, they're not going to be able to lower the interest rates. They're just not. They're not going to move them. So this is bad for DR Horton. That changes calculus slightly. It's still undervalued. It's still in the buy zone, but we know now that, especially with the exogenous events, that the interest rates will not be moving down as anticipated. I think there were 2 rate cuts projected, and I didn't check Khaleesi today. I should have. But the last I checked, that there were 2 rate cuts projected for the end of the year, and now with this war and gas about to skyrocket, I'd be very surprised if we get 2 cuts this year. So that's what I have. Brent?
And just to clarify, because I'm losing track of the wars, this is now the Israel-Iran war?
Yes,
Yeah.
the latest soiree into the Middle East debacle. So yeah, so that, when I talk about why I mean that, because they're not stopping, right?
Mm-hmm.
When I checked this morning, they're still full blown. They're still going at it full blast, and it's been 2 days now.
Yeah.
Mm-hmm.
Usually what was the last time they bombed for a day and then it was over.
Right.
This is ongoing now, and so this is going to affect the Strait of Hormuz and all that nonsense. Where we can't ship it out, so we have to jack the price of gas to $125 a barrel immediately.
Mm-hmm.
Yeah, you're going to get that nonsense. So at least that's what it feels like now, unless things calm down immediately before Monday.
Yeah, I can't imagine that.
It feels like no, it doesn't seem like it, and especially after the 2 days of it doesn't seem like there's an end.
Mm-hmm.
So I think we've kissed the interest rate cut goodbye for this year.
Mm-hmm. Yeah. Okay. For Tractor Supply, they've announced that they've started offering Lincoln Electric welding machines, which is a very well-known brand in welders. Their March 2025 report says enrollment in trade schools across the country is increasing, significantly outpacing overall growth in higher education enrollment. And they said a major portion of the trade school, I guess, graduates are majoring in welding. So they think that this might be a growth area. So they've added this well-known welder brand as well as welding supplies to their current offerings. The CEO in a different interview estimated that about 20% of their customers are currently raising chickens. So they're still focusing on providing, the livestock as well as all the supporting tools and supplies and everything for people to raise chickens from to get their own eggs standpoint. And a new value line was published. There still has positive outlook. It says the company is trying to reduce their Chinese import reliance from 70% to 50% by year end, just to have less impact from the tariffs. And their store expansion practices are on track. So even though the stock price has been kind of flatlined recently, value line is still bullish on the prospects of the company as well as future possibilities. So I have them, I forgot to check if it was in the buy or hold, but I guess I currently have Tractor Supply in a buy range, but I don't know that I think our money is probably better spent elsewhere. And then ACMR, another month with not a lot of news that I could find. The stock price increased about 10% from last month, so that's a promising trend. And I'll see if I think they're in the buy range also for me, but I'll check real quick here. Yeah, I have them in a buy also. But nothing else that I could really find for ACMR, unfortunately. That's it for me.
Jack,
Yes. Hello?
next your time.
Yeah, I'm sorry, my computer just crashed, so I'm,
Oh, you want me to go
yeah,
ahead?
go ahead. It'll take me a little bit to get myself back together again.
Sounds good. Hello, everyone. I am tracking 3 on our portfolio. One is Julian Loki. The other one is SEIC Corporation or SEI Corporation. And the third one is Qualys. No big news from all 3 of them, except for Julian. They had their quarterly report on May 7th. Again, nothing surprising. They did outperform the expectations. I had a 25% increase compared to the last year, so it's overall good. They don't have anything surprising. They don't have a recent value line. The one is from April, early April, so probably one will be coming up sometime in the next month or so. According to I lost my thought. Not manifest. What's the other one? We keep following.
Value line.
Morningstar.
Morningstar. Sorry, I'm just blank. Yeah, Morningstar. According to Morningstar, again, overall outlook is pretty good. They closed at 171, which is a little below the 190 to 52-week high. According to value line, the Morningstar, it's right there on the 151 to 207 is the price range. They had some changes in the leadership, but long-time employee has taken over as managing director. So nothing surprising. Next call will be in July. According to the list we have, Julian is he's a hold. The next one is SEIC. Again, they're also doing well. They don't have any updates on the quarterly reports. I think they had one in late April. Nothing since then, and the value line is also not updated since middle April. So not much to report. Again, they're steady. Again, Morningstar considers that to be a profitable, and its financial strength is it's solid. They have a narrow moat, obviously, because of the market and they are in. But I think it certainly is picking up as we see. They will have another call in early July, so probably we'll have something for the next month. And the third company, Qualys, again, they had their quarterly report on May 6th. Again, they also beat their expectations. Overall, they grew almost 10% year-over-year increase. So overall, there's nothing surprise about them, and they claim they have pretty solid bookings, and they upgraded their forecast for the rest of the year. That's it again, and then nothing surprises. Value line also considers this value line is from 11th April. Again, no new updates, so not much to change there. They closed at 138.78, much below their 52-week high of 170. It's above the fair value. So those are all, again, no action needed on this one either. So that's where we are.
Okay. Let me do mine. Monster is, they reported last month, and I just really dug into it for this meeting. They had not a massive, but a 1 penny surprise. 1 penny better than the analyst estimate. And it's the first time they didn't miss their quarterly estimate in over a year. So that's good. And the analysts think they're going to do it again this quarter, but we'll see. Their next the Q2 is coming out in July or something. August, early August. They're in the hold zone still. Yeah. The next one is NMIH. They're the mortgage insurance people. They're also a hold. They actually went up 6% over the last month since our last meeting. So there's, I added in some ZAC estimates and some other estimates, but they seemed to they're not doing good in terms of some of the metrics that we like to have for them for our SSGs. They have they're in the hold zone, but they only have a 1.6 to 1 upside downside ratio. And the CAR looks okay at 10%, but the PAR is down around 5 or 6%. So that's getting worrisome. Yeah, so I'm thinking that we should consider selling this at some point. We just bought them last December. It may be too early to do that, but I think it's I'd like to see their growth prospects be better. Maybe we wait till the next quarterly report to see what they did. So that's it for me. Both of mine are holds. Next is Jessica. Sriram, do you have to be someplace?
In about 15 minutes, I'm going to drop off.
Jessica, go ahead.
Okay. Pfizer, their price was up a little bit, about 8% from last month. They announced entering into a licensing agreement with a Chinese company, 3S Bio, for an experimental cancer treatment. I don't know exactly what that will entail for them, but it sounds like the market was very happy. And then the CDC had announced new guidelines for approval for the COVID vaccine that was less restrictive than what was anticipated. Morningstar is maintaining their 5-star value, or their 5-star price with a fair value of 42, and Value Line or CFRA updated theirs. Their new target price is $27 from like $30. I think they're technically a buy for us still. EXLS, they were up a little bit from last month. I don't have much new information, but they did get added to Value Line as like an actual part of the survey. They had good, I don't know, they expected continued stable growth. They did not recommend them as a buy. They just said wait for a better entry point. So I think they're in our hold range. They're actually heading up into my sell range. But they seem to be doing well. And then SLP, they are down about 38% from last month. They had announced earlier this week preliminary Q3 guidance. They're expecting a decline in their revenue for the quarter, expecting 19 to 20 million, and they downgraded their yearly guidance to 76 to 80 million from, it was previously 90 to 93 million. So I felt like that was kind of a big downgrade. I can read what management had said. It was related to just headwinds currently. Where's my, there we are. It was due to growing market uncertainties, such as shifting drug pricing policies, potential tariff implications, constrained funding, are creating headwinds for the company's pharmaceutical and biotech clients. Headwinds are led to tighter budgets, delayed projects, and cancellations. Most of the decline in revenue has come in the services department, which is like their consultation services. Their software segment, which is the part that does modeling for drug development, seems to be doing okay. But when I looked at it, the services segment was about 41% of their revenue, which I thought was also a big chunk. Anyway, their official quarterly report will be out in July. They're technically in the buy zone for me, but obviously I would recommend not buying just yet. I think that's all I technically have, unless people have questions.
Okay. Randall?
Okay. I'll try to keep this brief. There's not a whole lot here. IESC, they did release a new value line. They're still looking favorably on the stock based on the acquisitions that it's made in the past. And they're expecting it to, the revenues to still move forward at a consistent, or they say in value line, a strong clip. Hasn't really been a whole lot of news. The CEO stepped down on I think June 11th, I believe, and they did have something interesting where the CEO sold 5,764 shares of stock. I think it's kind of part of that transition. But in terms of the numbers and kind of how the stock is doing, it's gone down just a little bit, but it's still within the hold zone for me. So I don't really see any reason for us to make any changes on it. There hasn't been any earnings or anything between last month and now.
John sent us, oh, come on, where is it? John sent us something about this, but I can't find it at the moment. Sorry.
Jack, I can read it.
Yeah, go ahead.
Netflix, and he said, I have it as a hold, very close to a buy. It's been a great stock for the club, and I look for more profits in the future. I did note on my SSG that it's overvalued, which does concern me.
Great.
That was his note.
Thank you. So let's see. We have to decide whether we're going to buy anything or not today. Oh, the watch list. I'll just give you that real quick. Just a second.
You can take the screen, Jack, and show your agenda.
Yeah, everything is on the watch list as a hold. Let's see. there's my watch list summary. They're all holds.
Yeah.
Okay. So what are we gonna do? What are we gonna buy? Any,
Yeah, Jack, so I have a proposal I'd like to
Yep.
float. So, and the reason that I'm floating it this way is because I think there might be some volatility in the market at the
Yep.
90-day after the tariffs were due, even though there's the behind the door deals getting done. In theory, the tariffs go back on July 9th if there's no deal. So there'll be some market. What I'm trying to say is the market's relatively calm now. So what I would do is sell the two dogs, Pfizer and SLP, and pump it into the new stock, UFPT today.
so that would be, let's see. Let me look at my, how I wanted to show them. Come on. SLP is 2% of holdings, and Pfizer is 4.5%. So that would make a 6.5% holding. That would be fine. Plus a little more. We have
I
0.8%.
think, can I make an amendment to his proposal?
Go ahead.
Let's not sell all of the Pfizer, we'll sell half of it. I think there is a potential for it to recover some more. I don't know. Jessica, what do you think? You're the stock voucher for both of them, actually.
I think I'd be okay with selling Pfizer. I mean, we could keep it. I do think there's a potential for it to continue to grow a bit. How quickly that happens, I don't know. It's never been one that followed like BI principles of like steady
Yep.
growth or steady revenue. So it's been a harder one to track.
Yep.
It certainly is on the upswing right now, and I feel like there's been so much bad news baked into it. It's hard to picture it getting worse, but I don't know. It continues to surprise me. So SLP, I don't know. I like SLP, but I really have a hard time figuring out where it can go from here. It had a really hard time with like changing it's had good revenue, but the EPS has always been low or declining. It's been like putting its money back into the company. And with its revenue now going down too, I don't know that I see a bright future for it. I hate being knee jerk when they just announced a couple weeks ago. Like, I don't know if the price will recover a little bit more before we sell it, but it's one that I don't know what the long-term picture would look like for that one. So I'd be okay with selling that one.
Yeah,
Go
that's
for it, and then I withdraw my amendment. Let's get rid of both of them. And do you want to put all that 6% plus another almost 0.8%? Will be 7.25% into the new company that we discussed today, UFPT.
yes. It would make it basically an average, or near the median anyway of our holdings.
Yeah,
So
that would be
fine.
the cleanest. Just to sell the two, take the available cash, and buy UFPT.
Yep, I can go along with that.
Okay,
It's fine with me. It's just it's a shame that we're taking a $8,000 hit, but maybe we can take advantage of that later in the year to do some cost basis cleanup like we did last year.
Yep.
Yeah, I hear you completely, Brent. And the only reason I suggested it is because I think, I've been shocked at how calm the market has been, but I don't think it's going to be calm next month. And these underperformers, if I had to guess, and especially there was very bad news on SLP, that's going to take a while to straighten out. And it's just, I think it behooves us to sell it now, to take harvest the loss, and then we've already harvested the loss for the end of the year. We certainly won't be paying any taxes. So
Yeah, and I guess if the SLP story does clean up, we can always re-enter at the lower price.
Right.
So yeah, it's fine with me.
great.
I'm fine with it. This is Randall. I'm fine with it for two reasons. One, I mean, if the goal of us is to diversify, I mean, this is how you do it. And then number two, I'm not a fan of just holding on to something, hoping that it turns around. To me, you're missing out on opportunity costs. So yeah, you're hoping that you don't realize a loss, but you're missing out on the opportunity for this other one.
Yep. Yep.
Does Bivio display the small cap, large cap kind of pie chart breakdown, or is that separate?
No, it does. Do you have that? Yes.
Jack, just scroll down. I think it shows it right below where you are. There you go. Is that?
But it's not by size.
Oh, okay.
Yeah,
And
may have. I guess it was what Jessica
does that. Oh, I can get it though, I think.
I have one for this month if you need it.
I think I got it almost here.
Okay.
There you go.
Yeah, so let's see if this does this. Yeah, Pfizer, so 4.6% plus 2%. So
Yeah, net we will gain a little bit. Yep.
yeah,
Okay, so we're not quite at 25% for the small.
yeah,
With
we'll go up a few percent, 4 or 5%.
Okay,
We
we're
get
good.
closer.
Yeah. We'll be about 3% short on the small cap.
Then we have to work on mid caps.
Yep.
And
Actually,
also,
yeah.
too, again, to reiterate, I don't know if we're going to find any other small caps that are going to look this good.
Yeah.
I mean, that's almost like just a needle in a haystack.
Yeah, I think you're right.
Never say never, though. I would have said that last month, and then Jack found this one, so you never know. But I tend to agree.
Yeah.
Okay. All right.
Well, I'll never say that.
Any more comments about putting all our money in the new stock?
I don't know. Is John easy able to chat anything in the
Yeah,
chat?
I don't think so.
I just actually turned
there
it
you are.
on. I apologize for not being able to be plugged in. I'm in the boondocks of Maine
Yeah,
and my internet connection is very, very, very poor. I've heard the last 10 minutes and I'm impressed with what you guys are doing, and I'm particularly happy with the sale, but I'm not certain that it's good to invest all of that in this brand new stock. I'd like to see a little bit of it go towards IESC. We've owned it for a very short time.
Yep.
It's returned some very good money to us, and I'd like to see a little bit of that go into that stock as well. So if we split it into thirds, that would make me smile.
Thirds to go to what? A third to go into IES, is that what you're saying?
Yeah, a third to go into IES and the 2/3 into the new stock.
Okay,
Jack, how about this? I think it's cleaner if we just take the available cash and put it into IES and then take Pfizer and SLP and put it into UFP.
Well, that's about 18,000 or thereabouts. My quick math, is that about right?
yeah, I don't know, I'll believe you.
And if we have the available cash, that's about 1,500,
2,000,
2,000.
Yeah.
Okay, so that's 20.
20,000,
If
yeah,
those numbers are correct, I'd prefer to see a little bit more go into IES. Let's say 5,000. And then you've got 15,000 going into the new stock, which will still give us more of an investment in the new stock than IESC that's already been good to us. So I would amend it to
Yeah.
5,000 to IESC and the balance to the new stock.
Yes, that makes sense. So, yeah, so we're up around 17, 18,000, you're right. For once we sell these two.
Yeah.
I have a
Yeah.
question though.
Yeah.
If we do that, if our goal is to be more balanced, and we use up all of our remaining resources, we really can't do that anymore. Is that correct?
Well, we need to expand both our medium size and our small size companies. So
Yeah.
we're correcting the balance of
Yeah.
having too much large cap.
Yeah. Another way to look at that is IESC is at 3% now.
Yeah,
And if we add another percentage, probably 2%, that'll come to about 5.
Yeah.
And we'll get about 5.5% for the new company. So
yeah,
it's,
that'll be about this. That'll be close to the same.
yeah, those will be in line with most of our other, we have
Yeah,
Excel.
IES is still a little small.
Yeah.
Okay.
So I think
if IES is, if we still consider it a little small, then I'm good with that.
Yeah.
Yep.
Nice suggestion, John.
Yeah.
I think that's a good idea.
Thank you.
And also it has gone down, especially yesterday, it took a hit and gone down by $10.
It did.
Yeah.
It did.
Yeah.
But
Good.
I mean, the market took a hit yesterday.
Right.
I mean, SPX went down 70 points.
Yeah.
Right. Very good. Hey, folks, I need to drop off. Again, I know I've been saying this. I will get with Jack next week. Jack, I sent you an email asking for some time on Tuesday or Wednesday to go over with the agreement and finalize the process for moving forward with the fiddle tape.
Okay.
If you have some time, please respond to my email and let us set some time together and go follow that process.
Good.
Excellent. Any other questions for me before I drop off?
So you're going to do the buying on Monday?
Yes.
Okay.
I
Good.
will.
Good luck with the presentation.
Have fun.
Thanks, everyone. Bye-bye.
Good luck. Bye. Okay.
So just the one note that I'll say on the IESC is I don't have it in the buy range, but I may have been overly conservative. I'm all for, topping up some lower holdings, but
It's in,
I
the,
think
it's in the whole range.
okay.
At least
Then
it's in the whole range. But I don't. If part of our goal is to kind of change where we're sitting, I don't see that as well. I'll defer to people who've got more experience. Do
Where
we
is it
want
at in the
to
range?
just do something that's in the buy?
what did you say, Jessica?
Where is it at in the hold range?
Well, for my analysis, I have it like it's hard to say, but like halfway into the whole range. Like
Oh.
my buy is up to $186 and it's currently 261.
Oh, I don't think we should buy it then.
Yeah, it didn't strike me as, I mean, it's still a
Yeah.
good company. I think it's just the price is a little bit high at
Yeah.
the moment.
Oh, yeah.
Yeah, mine is kind of similar.
Yeah. Mine too. I'm showing it here. Yeah. So, should we hold some cash, or should we invest it in? Give me another option here. I'm a little confused about where we're standing.
Well, yeah, one option is that we hold back we were going to invest what, 5,000 into IESC. We could,
Something like that.
we could sit on that cash until next month.
Yeah.
To reserve it in case IESC goes down, and then, invest the remaining, whatever the proceeds from the two sales and available
Yeah.
cash less
Be
5,000, put
about
that into
$12,000 or something.
yeah,
I
put that
think
into the
since
stock.
Srini is off, we know that he agreed with doing the two parts. So let's just do the two parts and then just keep that remaining as cash.
Yeah.
We know we have his agreement on buying two parts of the new company. We know that for a fact.
Yeah.
I'm sorry, say that again. Sriram's agreement?
Yeah, he was in agreement with what we were saying initially, which was
Right.
two parts going to the new company and one going to IESC. We're now kind of having second thoughts on one part going to IESC.
Yeah.
So keep the one part in cash and then the two parts go to the new company. That
I see.
we know that he still agrees with.
I see. Two parts being the 2/3 of the proceeds. Yeah.
Yeah,
We could
2/3
ask-
of the other proceeds when we sell off the two dogs, as as was said, and then put that in the new company, UFPT, and then take that last third and just leave it as cash, because of us seeing the IESC is not in the buy zone right now.
Mm-hmm.
We could tell him to do a limit order for IESC at whatever price he thinks is a good buy price. Instead of for the day, we just say until it's done.
Well, I
Well,
would
Brent,
even-
what is
I would
your
even-
buy price on that? It was
My
quite
buy price
quite
was
far
about
from where the
$200,
current
I
price
think.
is, right?
I wouldn't even do that because there may be better opportunities out there than that one.
Yep.
The
My
time
buy was
between now and next month.
Yeah. So just hold cash. That sounds simpler.
my buy was 186, up to 186. So
Okay.
it'd
Yeah.
have to kind of crash to
Yeah.
be down in that range.
And mine
Yeah,
is,
so it's been doing pretty well then, the stock.
And,
Yeah,
and
so
that's probably my point. I think this stock is not very well followed by analysts nor value line. Personally, I think it's a sleeper and it's rewarded us well for the past 2 months. It may be in the hold, but I just have a good feeling about this stock. If you don't want to buy it and put 5,000 in cash, that's fine.
okay, let's do that. I'll tell I'll tell Shriram what we decided. Okay, let's go on to the rest of the meeting here. So we're almost done. We have a few more items. So Shriram says he's going to do the stuff that's here. Do we have any new business? Hearing none. I guess we're just about ready to adjourn. Are there any questions from the audience? Joe? Let's see. I think there are a lot of people watching watching Bink. I don't see any questions from attendees. So I think we're ready to close up the meeting. Find my,
We don't have the attendees with their microphones turned on yet.
okay, could you do that for us, please?
I'm working on it.
I was looking for questions. Nobody has a question.
I was on the phone with
Ah.
one of the attendees when you called on me.
Okay,
I have a question.
yes.
Yeah, it has nothing to do with like, what stocks you were picking, but like given the current situation with the U.S., Iran, and Israel, do you think that maybe something like an Exxon Mobil would be a good stock to buy on Monday?
I'd have to look at it. Our feeling is that in general, our feeling is that those commodity stocks are very difficult to deal with because of things like this. And the shock was so bad, it affected all the market yesterday, although I think a lot will come back in the next week sometime, whenever the war is over. But I think oil stocks just aren't our cup of tea. We decided at some point not to go into commodities like that.
And I guess I would add to that, this is not a day trading operation. It's a long-term investment, and trying to react on 2 or 3 days notice and then in anticipation of what can you do in a week or so, it's just not part of the good operations of an investment club to be thinking like day traders.
Yeah, that's I think it's more in the realm of speculation. Unless we have good information, we just can't make a decision like that. Is that Alan?
Yeah.
Yeah,
I
thanks.
was just kind of thinking because I understand your perspective of it being speculation,
Yeah,
but I also understand the perspective that this may be a long-term war. So if
yeah,
it lasts a few months,
yeah,
it might be, like it might, like produce some type of profits in the short term and then get out after maybe a few weeks or something. But I understand your perspective that
yeah.
that's all like a
Okay,
speculation. And you
yeah,
have no idea what like negotiations might unfold or anything
okay,
like that. Yeah, I also wanted to mention I appreciated your meeting. I thought it was very well done. Thank you.
good. Thank you.
Anyone else?
No? Okay. Next meeting is July 12th. Let's see. Let me find my goodbye slide. Thank you all for attending. If this meeting was helpful, please tell your friends. You can find us on YouTube to see this or other meetings at Yankee Model Investment Club. If you haven't registered, please, in your own name, please register online. Oops. If you would like to join, please contact Jessica at this address. Thanks very much. Anything else before we adjourn? Okay. Bye,
Thanks,
everybody.
everyone.
Everybody
Bye.
on, stay on.
Thank you, everyone. Goodbye.
Okay.
We can go ahead and turn it off. He had to leave.
Okay.